What's up, everybody? Welcome back to Earn It, Save It, Invest It. This is week 21 of my $100,000 challenge. I'm going to be breaking down how my portfolio is done, if I've done any selling, if I've done any buying. I'm going to go over kind of what I think is going to happen in the market and what the market sentiment is. I'm also going to go over how easy it is to retire around 60 to 65 years old, even if you start at 30 to 35 years of age. I'm 36 right now, so I'm going to break that down also at the end. So if you do like my stuff, go ahead and please give it a like and subscribe. It really helps with the channel and the content. And yeah, so let's just go ahead and break it down. Right now, I am currently, my road to 100,000 or my $100,000 challenge account is at $9,576.67. Just kidding. So, as you know, if you have been following, HIMS is a big weighted position. I did sell. I used to be at 50. Now I'm at 40. So that has helped. And TQQQ is creeping up because it has been gaining. It's gone up 6%. This has gone down 2%. So it's just starting to catch up. And so HIMS is not having as big of an effect on my portfolio, but it is having an effect still nonetheless. If you can see right here, Amazon, Hesai, and Adobe. These last two are added. I'll go over those really briefly. Amazon, I just added more to it. I had like 2 and 2 1/3, right? I only had 2 1/3. So I just wanted to have just a solid 3 shares, and then maybe go up from there, maybe buy per share, or I could be buying like $100 worth of Amazon, because if you didn't know, a lot of these brokerages, especially like Robinhood and stuff, but I use Schwab, they let you buy slices, what they call Schwab slices, or just a portion of a share, right? So if you want to buy something but it's too expensive, you can just buy a portion of it. They don't do all shares, but the big ones like Amazon and Meta, Netflix, I don't know if they do HIMS. Adobe, they do, because I got that. I did $100 of Adobe, and so I only got a partial share. As you can see right here, I only have 0.28 shares. So, but I have it, I bought it for $100. So this is what my account is looking like right now. My portfolio performance over this week, I put in $50 like I do every week, and it's gone up $104. So nothing significant, but it went up nonetheless. As you can see, over compared to the other indexes, I am behind. I have 1.1, and everyone is at 2%. Basically, S&P is just trailing 2%, and the S&P is actually under the Dow Jones, which is a little surprising. Dow did pretty well this week. Since I started this this challenge, this was June 2nd, I've invested $1,050. My investments have gone up $1,172. Since I started at $73.54, that puts me at $95.76. As you can see, compared to the indexes, I'm doing okay. I'm not beating the S&P. I am beating the Dow Jones, and the NASDAQ and the Russell 2000 are beating me pretty significantly, by 50% compared to me. Russell 2000 is on a run right now, and so is the NASDAQ a little bit. Again, just to go back to where HIMS, when I first got HIMS, I started this challenge June 2nd, HIMS had already run up pretty significantly. So my account is I don't want to say skewed, because you can always just invest. Whenever you start investing, the stock can go up and down at any time. It is what it is. But when I started this challenge, I had already started at kind of like a high point with a heavy weighted position. So I was already kind of had that going against me. So if I took out the performance of HIMS, I might have actually been closer to the S&P or the Russell 2000. I mean the Russell 2000 and the NASDAQ, because those were both at 22%. So I think I could have been closer to those if I had taken out HIMS. But again, nonetheless, I've been making profits on HIMS. I sold at 58. Right now it's at 48. I sold 10 shares. So that's kind of saving, in a way, $100. Because then I went and I bought Hesai, Amazon, Adobe, and of course I invested $50. So in total, because I invested 50, at negative 310. So this is really, I spent $360. I bought $100 of Adobe. I got that much. I bought Amazon just $148 because I wanted to even it out to exactly 3. So I had to buy 0.67 shares. And then I bought Hesai, 5 shares of Hesai because, like I said, you could buy pieces of a stock, but some of them you can't. Hesai is a Chinese LiDAR group, a LiDAR company. So you cannot just buy pieces. It's only $22 when I bought it, so it was fine. But I did buy 5 pieces of that, so that my total was $112, then $148 for Amazon and $100 for Adobe, put me at $360. Like I said, my starting balance was $7,354. I've been making $50 deposits a week, and I'm trying to buy $50 a week. As you can see, I bought more this week. And the big reason is because I've been saying there's going to be a correction happening, and I'm going to go over what I think, when, and what will happen. I have been wrong so far, and that's fine. I've been right sometimes, I've been wrong sometimes, but I did start loading up on a little bit more cash, and I still believe in that. I still believe in having some more cash available. I sold 10 shares of HIMS, 58, so I made basically $580, right? Almost $600. And then I sold $360, or I bought $360 worth. So I'm still plus $220 in terms of that sale and having that cash available, because I do think something will happen eventually. But there will be times where I buy, like right now I'm like, okay, and I'll kind of go over quickly why I wanted to get into Adobe now a little bit. Hesai, same thing. I believe in both of these companies. I'll do bigger, more detailed breakdowns of these actual companies and the numbers later, but I just wanted to start a position because I do believe in those businesses and where they're going. So yeah, and so I'm making $50. I'm doing $50 deposits a week. I'm buying $50 or so, depending. And then my goal is 20% CAGR a year, right? Compounded annual growth rate every single year. So this list is, I'm going up, not going up 20% per week. This is every week, right? These are the weeks. And, right, this was my first week, and how much I had, or actually, hold on. Yeah, that's right. So after my first week, my second week, right? So I'm at week 21. And I should be at $9,003, and I'm at $9,576. But if you look back at week 16, I had more than what I have today. So when you look at how I've gone per week, I've gone up. I went to 86. I went to 88 at some point, right? Week 9, and then I dropped down to 85 for 4 weeks, and then I went back up to 89, and I never looked back, right? But then I jumped up to 96, and then I started to retreat again, went to 93, and now I'm starting to move my way back up. So the point of it is, it's always like this. That's the stock market. You have to keep your emotions in check, keep the numbers, keep everything, your goals, your mindset, everything in check and on just consistent, because the market will be inconsistent, has its flows and stuff like that. And you just have to say, look, this is what I'm doing, and you just do it. And so yeah, I'm above what my goal is, but I do think at some point I might go under that if there ends up being a correction to where I think it could. I do believe my account balance will go under what my goal is, and then eventually we'll go back above it. The AAII sentiment. This is basically where the investors come together and they take a survey and every week and about how they feel of the market. It went up a little bit with the bulls. It went up about 3%. As you can see, we're at 45 a couple weeks ago, and then it's just kind of dropped a little bit since then. The question is, this week's special question, do you think other investors are too bullish or too bearish right now? Well, people, too bullish, 54%, right? Even though we have more bears. We have more bears than bulls. We've gone down 10% in the bulls, right? But yet 54% thinks we're too bullish. That's very interesting. We're also fearful, right? We're in the fear part of this fear and greed index. So it's just very interesting how we're in the fear, but people think we're too bullish. The market's gone up, so I don't know. I want to quickly go over, very, very quickly, go over how you can be a millionaire by the time you reach 60, 65. I'm 36 years old, so I just wanted to put this into a perspective for people, because my peers are in their 30s and their 40s, right? So I could be talking to them, and then I also have I have 2 kids of my own. My peers have kids. So some have teenagers. Some, the older peers that I have, maybe having a kid in high school or going into college or something like that. I also have family members who have newborns up to 5 years old, stuff like that. So I'm just really trying to get people understanding how compounding interest works, and how just simply investing consistently and starting early is so big to making money and being comfortable. Because I keep putting this in the perspective, and I keep trying to put this in the perspective of people of like, think about how you're living right now and how much better it would be, not necessarily that you have everything for you. Oh, you have a butler and you have this and that, right? That's not the goal. But my goal would be is to give my children or my grandchildren the opportunity to do something that they would prefer to like and have a passion for. And I don't mean being lazy. Doesn't mean do something, be productive though, be creative, do something. But they have this safe spot, just some money, a safety net, to where when they grow up, like, okay, I don't have to. Most of us are working to retire. Most of us don't work because we like to do what we do. Most of us don't work and are like, all right, yeah, like I'm good, like the bills are paid. Like, no, that doesn't happen. That's what I would like for my kids and my grandkids to do, is focus and try to build something off their passions so that they don't have to stress out about the bills. The bills will come. I still want them to make money. I still want them to be productive and creative and all of that stuff, and to be a good person in society. But I want them to not have to stress out about making that dollar, because for me, that's what it can be, right? I have some money here, I have some money savings and this and that, but I have to think about, oh my God, but what happens when I retire? If you start setting up people good to retire by the time they're 15, 20 years old, 23, they can really focus on a passion, something maybe they can really be productive and grow into their own. And then they still have this thing that's growing. And, that's just how I think. So I'm going to kind of go over how you could easily do that. Now, let's say you have $0, you're 30 years old, and you're gonna retire at 65, right? So you have 35 years to save. And let's just say you have, let's go to 0. How much, let's do 8%, okay? Now, if you want to be a millionaire, let's go $500 a month. There you go. $500 a month is all it takes. $500 a month, starting at 30 years old, at 8% return per year, you could be a millionaire, right? That is good. Now, obviously, you can do better if you pick certain stocks and do certain things, right? But that's great, right? $500 a month is not maybe the easiest thing, especially given how things can be right now, right? But think about this. Let's mess with the numbers to really figure out something realistic. Let's say $10 a day. $10 a day, so it's $300 a month, right? But let's say you started when you were 25. So instead of 35, you have 45 years. And let's say you invested in some good stocks and you got, instead of an 8%, you got an 11%. Do you see it yet? $3.5 million. You can have $3.5 million if you started at 25. This is a 25-year-old. Sorry, this is a 20-year-old. 20-year-old investing just $10 a day at 11%. Imagine if you just did this when you were, let's just say, 5 years old. Let's just do 100 a month. $5.7 million. 100 a month. Now, I can't afford $100 a month right now to be giving my kids, but I do put some per month, and they save and they understand the points of stocks and stuff. But let's break this down realistically. Let's say you do 30 a month. This is $1 a day for your kid. $1 a day to have 1.7 million. That's crazy, right? Isn't that crazy to think? So, I don't know. That's just something that I always try to tell people about, because it is something to think about, you know? So, I'm going to go over the market. This is TQQQ. This is this is QQQ. And this is where I thought the market had a chance of falling. This was when the Fed was going to announce that they're going to cut rates. And I thought, okay, maybe the market might do the opposite. But no, the market's doing exactly what people actually thought the market's going to do. And since we had, we had that big tariff fall, it went down 24% in the Qs. Once we came back and hit an all-time high, we've just been on a stretch for 122 days and we've gone up 14%. 122 days, up 14%. That's pretty good. Especially given that we were having a pretty good beginning of the year, right? I mean, like, you look here, the beginning of the year actually wasn't that good, right? So I guess you could say up until June, we really didn't make any significant gains, right? I mean, we started right here. Let's actually do this. Let's see. Info. Boom. So January 1st, right? Our first time. When we got here, we're at 6% in gains. So even though we went through this big drop and we came back up, we're in this big rally, we're still only up 6% in the whole year. So that's not that much, right? But since then, we've gone up now 21% for the year. Does the market have more room to run? I'm not sure. I think if it does, there has to be something. Like, look, all of these triangles represent a 10 or more percent drop in the market. All of them but these represent what I thought was going to happen. I mean, when you look at it, how close they are together, the average was 112 days. So we're at 122. Now again, the average was 122. This was 175. This was 167. Now 79. This was 132. So we've had longer periods where we've gone and then we have this significant drop, right? But drops happen. They do happen. They will happen. It's gonna happen. So, I just be prepared. Don't be scared. Just be prepared. Have some cash ready. This is where we are right now. I just thought we were gonna be forming this triangle earlier, and we're not. And like I said, I was just prepping for cash. I thought maybe this might have been the start, but we've now surpassed that high. So we're continuing to climb. It is what it is. Yeah, that's the market. That's my portfolio. The market has to correct itself at some point. It has to. It will. It always has, always will. But don't stop buying. Like I said, I loaded up on a little bit more cash. I have a little bit more cash than I did before. But now I'm going to consistently buy every week, $50. And when that drop happens, I might have to pull some cash out of my booty, do something to start. My whole goal is to invest $50 a week into this account. It is possible that I, during a significant drop in the market, I put $500 in a week. If that happens, I might say I don't buy for a while. I don't know. I haven't even actually thought that through, because the point of my challenge really is to show that you can do it, right? You could $50 a week. You deposit and you buy $50 a week, right? The problem is like I don't have automatic buys like that. I search the market. I'm a little bit more. This is a little bit more of a custom challenge. At the same time, I want to get as close to $50 a week deposit, $50 a week buy as I can. So, like I said, I will get back onto that. I sold some hymns a little while ago, didn't make any buys, and then so I did kind of made what, $360 worth of buys this week. So, but that's also something that you're going to have to understand in the stock market, is that I may be buying I may be depositing $50 a month and buying depositing $50 a week and buying $50 a week, but that doesn't mean that all my positions have to stay the same. I might have to sell out of a position if it becomes overvalued or the business fundamentals change or something like that, right? And then I might have to sell a stock, or just like right now, like I said, I think HIMS is overheated. It overheated a little bit, and I think this month is historically pretty bad, but also every month that it has had a good or a bad month, it's been really good or really bad. And so I just think, well, if it's going to have a bad month this month, it's going to be really bad. And so I took my shot at it. I sold 10 shares. But the fact is that once I did that, once I sold those shares, I now have to put that money to work. I have to do something with that. So just because I bought $360 this week doesn't necessarily mean I'm going beyond my $50 a week purchase. In fact, that means maybe I just did $310 of actual purchasing. Right? So it's just of new purchasing, right? That $50 deposit went into the 50, I bought $50, and you could just say that went, about half of the Adobe that I bought, right? Put $100 in Adobe. So it's just one of those things where you have to understand that with the stock market, even though the challenge is about $50 a week, buying and selling, or about buying and depositing, it's not exactly that simple. You will be selling stocks and having to put that money somewhere. There will be times where the market is down, and it's just recommended, if you can, scrap extra cash together, sell some stuff, whatever you can to put extra into the market. So I will be doing that as well. That is going to be part of the challenge. I will let that be known. But anyway, that is all I have to say for the night. So go ahead and please give a like and subscribe. I really appreciate it if you are still watching. Never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.